item 3, minutes of the previous meeting. I've gone through them. I'm happy to approve. Anybody else have any comments, or are we okay to approve? Thank you very much. And then we'll move on to item 4, which is the audit completion report. And Mike, you're going to introduce the report and present the reports.
Thank you, Chair. The purpose of the report is to present Forvis Mazars audit completion report, and the authority's auditor, Forvis Mazars, is required to report the authority's financial statements, and in their opinion they give a true and fair view of the financial position for the year and have been prepared in accordance with the relevant local authority accounting code and standards. Forvis Mazars audit completion report is attached as Appendix A for members' consideration. It is recommended that members note the contents of the auditor's report. The auditor's completion report confirms Forvis Mazars have completed the audit of the authority's financial statements and anticipate issuing an unqualified opinion following today's Audit Committee, confirming that the 24-25 financial statements give a true and fair view of the financial position of the authority as at the 31st of March 2025 and its expenditure and income for the year, and have properly been prepared in accordance with SIFA Code of Practice on Local Authority Accounting in the United Kingdom for 24-25. Members will note that the audit completion report identified internal control weaknesses within the production of the 24-25 statements of accounts. We are committed to addressing these through targeted improvements in the 25-26 production process, ensuring timely production and full compliance with the updated codes and regulations. The report also identifies several additional areas for attention, and members will be aware of the significant team changes over the last 18 months. These, alongside vacancies and long-term sickness, have impacted the 24-25 production timeline, and the Head of Finance and I are working with the team on a forward plan to resolve these issues and prevent reoccurrence in future audits. While my review focuses on areas for improvement, it's important to note that Forvis Mazars identified no significant weaknesses regarding our value for money arrangements. Specifically, the auditors found our systems for securing economy, efficiency and effectiveness in the use of resources to be sufficient, requiring no formal recommendations. I will now pass over to Karen Murray, Audit Partner for Forvis Mazars, to introduce the audit completion report in more detail.
Thanks, Mike, and good morning, everybody. Pleased to present our audit completion report. It follows the audit strategy memorandum that you will have had earlier, which set out for you the risk areas when we were talking about the risk of material errors and the work that we would do to address them. So this report concludes that work, if you like, tells you what we found in respect of those risks and the other work that we've done. We received your accounts this year on the 2nd of July, so that was a couple of days after the statutory deadline of the 30th of June. Not particularly concerned about that slight delay, although the requirement is that you publish your accounts by the 30th of June. The audit this year has been much more difficult than in previous years, and for that reason you will be seeing more amendments in this set of accounts than you are used to seeing and more issues raised. I think it's fair to say it's been a much more challenging process and we've had to do a considerable amount of additional work. We do have a general concern about the quality of the accounts that were presented this year and the technical capacity that's in the team to support what are really a complex set of accounts. But as Mike says, there is a commitment to getting it right, and we absolutely recognise and value that, and we will sit down with your team now that the whole process is over and have a full debrief to talk about what needs to be addressed in detail for the future. That's really important because obviously the timescales for delivering the audit are coming forward as well. So for next year, the deadline that is tomorrow will actually be the end of January. So we do need to make sure that we're all geared up. There were 4 significant risks that we identified for you in our audit strategy memorandum. The first one was in respect of the management override of controls, and you'll be aware, because I'm sure we told you at the time, that that risk is around the things where management can directly influence the accounts and make decisions that change the numbers, if you like, so their judgments or the journals that they post. All of our work on that has been completed without any problem, and there's nothing to report to you on that. We identified your pensions accounting and the assets and liabilities that you disclose in respect of the 2 pension schemes as a second significant risk, and I'm pleased to say that our work has been completed on there with very little difficulty. So the only challenge there is that updated and better information becomes available as the time goes on, because you're relying on work that your actuary does at a point in time. So there are some amendments to that. I don't think there'll ever be a situation where you get away from amendments at that time. So nothing to be concerned about there, and nothing that your officers here could do differently. We have then done a third significant risk in respect to the valuation of your land and buildings. And some amendments were required to the accounts for that, and then we identified the fourth significant risk as being the implementation of IFRS 16. That was a change to the way that you account for leases. In fact, the most significant change to your accounts this year has been that those draft accounts submitted to us on the 2nd of July didn't include the remeasurement of your PFI asset on the right basis under IFRS 16. I'm not going to talk about the technicalities of that because it really is a complex, really nerdy accounting standard, and that I don't think is worth me assuming you're all interested in. But if you do have any questions, Katie is delighted to answer them. In terms of any of other work and the other issues that we've raised, the most significant issue that we had during the course of the audit was around the rest of the asset register. So you had some assets included in your asset register where they had been fully depreciated and had a net book value of nil but were still in use, so should have had a value. And that indicates that your depreciation was too quick or your useful lives were inaccurate. And then separately you had some assets that were still in use that had been fully depreciated and written out of your asset register, so an inconsistency there as well. So adjustments have been made to bring back into the asset register the value in use, the right net book value for those assets now. I mentioned IFRS 16 being complex, and if you've any questions, Katie will talk through them, but all of the recommendations that we've made to you are around making sure you address that capital accounting, that accounting for your assets in all its complexity, because I think it is a big area. Just in terms of the accounts, you will see that there are on page 33 of the pack, you'll see there are a couple of there's an unadjusted error in respect of some accounting around debtors. They're all debtors errors. They're all about things being charged to the wrong year. They're very minor in total, so we're not proposing that you amend for those, but I guess there is an issue there about making sure that we get those things right in the future. But what you will then see on page 35 is rather a lot of adjusted errors. So management have made changes to the accounts in respect of the issues that we've raised. The first one, which is the £33 million, is a reclassification of some income, and then the third one, £14.5 million, is your PFI scheme that I mentioned earlier. You will also see that we've reported some disclosure changes, and there's a significant list of those as well, and it's a longer list than you've had in previous years. I'm going to stop talking there, but I am happy to take any questions if members have any, because it's important that you have the opportunity to understand those changes to the accounts if you want more detail around the technicalities before you approve them. But just to remind you, we intend to give an unqualified opinion on your accounts, and we will do that tomorrow. The work that it says is outstanding in the report at the start of the report is just to give me the wriggle room to make sure we finish everything on time. So we need to receive from you your final approved set of accounts and the signed letter of rep. We need to check that they match exactly the set that we think we're expecting from you and that you haven't changed anything in the meantime, and then we can close our file and sign off, and we expect to do that either later today or tomorrow, depending on the timing of receiving your signed accounts. I do want to say though, despite the fact that the audit has been really challenging, your team have been great to work with. We have, I'm sure, got on their nerves a little bit because the process has been quite challenging. So thank you all to Mike, to Neil and to Alice and James and others in the team for bearing with us. It has been a really difficult process this year. My team have worked incredibly hard, but so too have yours. And I am very grateful to them because sometimes people do give up and it isn't always helpful there. But your team have really worked hard to help us to get to the end. Thank you.
Thank you very much for that comprehensive summary. Really appreciate it. As you say, it is a very in-depth document, I think is the nice way to say it. So if you do get questions, especially from me, I'll not make apologies if I'm asking the silly questions.
There are no silly questions.
Because sometimes I need to just understand a little bit more about what's going on. But before I ask my questions, we'll just open it up. Does anybody have any questions? Yeah, that's quick.
Thanks, Chair. Well, yeah, really pleasing, but not surprising to hear that our own internal team were very helpful and very good at supplying you with information. I don't want to deprive anyone of a chance to do a nerdy reply to this, so I'm sorry if I am. But I tried looking at IFRS 16 and obviously gave up very quickly. But all I'm going to really ask is that obviously we need to do work on this. Do you, Karen, think that we're working with Mike and his team and we're going to be in a much better position to cope with IFRS 16 this time next year? That's the question from the committee, really. Yeah.
So I think the important thing to note, and perhaps I didn't make this clear, is that IFRS 16 was new this year, so you've had a transition. So in addition to your normal accounting under IFRS 16, you've had to move from the old basis of accounting for these assets to the new. So it has been particularly complex, and I would hope that those challenges don't arise in the future. I think there may be a challenge for you if you enter into new lease arrangements, but hopefully it won't be as complicated as this. And it was really around the remeasurement of your PFI scheme that the real difficulties arose, and of course there aren't any more of those, so that's not too likely to reoccur.
Thank you.
Thanks very much. Anybody have any questions? Okay, I've just got a couple, and like I say, I do apologise if they seem a little bit daft. I'm probably my the assurances that I'm coming to you for. So where we talk about the audit misstatements that are detailed in page 29, I think one of the things I'm looking for is confidence that that will be reduced going forward, and what were the key drivers behind those misstatements happen. So I know you talked about capacity. Is that going to be addressed going forward? Was it a short-term capacity issue? And really, is there any more support your team needs from the authority as a whole?
Thank you, Chair. So just to cover some of them misstatements, some of them are moving from one line within the accounts to another line in the accounts, and some of them have been probably within a similar line for a number of years, and when you look at it from a different angle, the way it's moving into, so you see the big one from the £33 million one, that's where you're just putting the government grants into fees, charges, and the actual line is called other grant income to move down to government grants. So some of them are changes that are being put in place and will continue going forward. And just in terms of the team and capacity, as you're aware, we went through a number of changes over the last couple of years in terms of it's a new team, relatively new team, but at the same time as year end, we also had turnover not just within the accounting team, but a turnover within the Exchequer Services team. And the Exchequer Services team will pick up some of them invoice transactions, and it's just ensuring that they're getting the relevant training to ensure that they're charging them into the correct financial year. So some of them, the statements at the start of the actual list are covered and will be covered going forward in training. In terms of capacity going forward, we are reassessing capacity. James and I are looking at the capacity within the team to see how we can assist and give greater capacity within the team. We're also looking at additional training, so a couple of members of the team have already been on a SIFTA training course in the last couple of weeks, and they are going on a fire service specific training course within the next fortnight. So we're increasing the amount of training that the team are getting. We're also looking at capacity.
That's fantastic. Thank you very much. That does give confidence and assurance, so I do appreciate that. The other question that I wanted to ask was around on page 21, which was in regard to the so it's page 31 in the pack, but page 21 on the audit document. So it was around the significant control deficiencies on fully depreciated assets. So at the bottom, it's explained that there will be a new internal control to ensure that assets reaching the end of their predicted life are physically verified before being treated as nil value, and that monitoring progress on the improvements will ensure that the financial reporting controls remain robust. How's that going to be reported to the Audit Committee in the year going forward, just so we can kind of make sure that that is happening? And also, can you give assurance to prevent the reoccurrence of this in the 25-26 audit?
Thank you, Chair. So this is in relation to a number of vehicles that would ordinarily be written out by the end of their useful life and will be replaced due to lead times on vehicle deliveries, lead times on ordering new vehicles. We've actually extended the life, and from an authority's point of view, we've got more value for money out of these assets. So if want a better word, we've sweated the assets more than what we would normally do. So they've gone beyond the life that the fleet manager had already predicted. So the team have sat down with the fleet manager and gone through the existing assets, and they plan to do that, and they will do that over the next couple of weeks. Now, we can definitely bring a report to see which assets are actually where we've revalued the life of the asset, so we've increased the life and extended, reduced the depreciation and extended the actual life of the asset. We can definitely bring a report back to audit on those assets. Neil and the team are currently in discussions with the fleet manager and how they're going to plan that and plan it throughout the year. Also, members will be aware that we are going to be taking delivery of a number of vehicles, and that actual list will reduce significantly over the next 12 months. Thank you, Chair.
Thank you very much for that. That's really comprehensive. Thank you. Any more questions that anyone would like to ask? No? Okay, so are we happy to agree the recommendations set out on page 7 of the agenda? Yeah, agreed. Lovely, thank you. Okay, we'll move on to item 5, which was the statement of accounts 24-25. And Mike, over to you again.
Thank you, Chair. The authority is required to prepare a set of annual financial statements in a format that is set out under relevant accounting code and standards, which must then be approved and signed off for publication by the authority. And the purpose of this report is to present to members the authority's 24-25 audited statements of account for approval, attached as Appendix A, and request that these are authorised for issue. It is recommended that members delegate authority to the Chair of Audit Committee and the Director of Finance and Procurement to sign the 24-25 statements of accounts and approve for publication on the authority's website. And note the Director of Finance and Procurement will sign the letter of representation in relation to the 24-25 accounts attached as Appendix B. The published statements of accounts must include an opinion from external auditors, Forbes Mazars, on whether the statements give a true and fair view of the financial position of the authority and have been prepared in accordance with the relevant code of practice. Paragraphs 10 to 25 and pages 67 to 72 of the report provide members with background to the four core financial statements in the statements of accounts, and these paragraphs summarise the 24-25 movements in the statements and explain any significant changes from the previous year's figures. Paragraph 20 outlines the balance sheet movements between 23-24 and 24-25 and the movements on the authority's assets and liabilities. The codes and regulations require a number of notional accounting entries and adjustments that are significant in value to be included in the statements of accounts, such as the depreciation charge. They are notional in nature, so they do not form part of the costs that must be funded by the authority's approved general fund budget. As per paragraph 8 of the report, the budgeted outturn position has not changed to that reported at the Policy and Resources Committee in July, and the report recommends that members delegate authority to the Chair of Audit Committee and the Director of Finance to sign the 24-25 statements of accounts and approve for publication, and note that the Director of Finance and Procurement will sign the letter of representation. Happy to take any questions, Chair.
Any questions? No? I just have one, and it was on page 70. Make sure I got that right. Hang on. Yeah, and it was just to clear it up because obviously it's delegating authority for myself to sign the statement. So I just wanted to clear this up. There was at section 19 a reduction in unusable reserves of 75.795. That's a significant reduction. Can you just explain to the committee so everybody understands what drove that, and does it affect the financial resilience going forward? From what I'm reading, it doesn't, but I just think it would be helpful for you to explain that, and also for any of the public watching. And as a follow-up for that, given the volatility of pension liabilities, what actions are being taken to mitigate future fluctualities in the unusable reserves?
Thank you, Chair. If I could just refer everyone to page 134 of today's agenda, and you'll see a table within the table 21, which has a further breakdown of the unusable reserves, and you can see the differences from one year to another. And you can see that the pensions reserve from 1 year has gone from 856 million down to 775 million, and that tends to have the biggest effect on that figure. They are unusable reserves, and when I refer to notional entries within the accounts, it tends to be a debit and credit to. If you look in the balance sheet, you'll see the opposite entry to the pensions reserve. In terms of the actual fluctuations in the pensions reserve, they are dictated to us by the assumptions that the actuary actually makes on the demographics of the workforce, and in terms of how long the pension will be paid for, when it will be paid from, and everything, and it will fluctuate. What I can give the reassurance is that those fluctuations don't have an effect on the authority's accounts. And when you turn to the back of the statement of accounts, you'll see the pension fund, and a lot of the liabilities within the actual pension fund, the day-to-day liabilities, are actually funded by central government.
Thank you for clearing that up. I think it's really good to get that out and discuss, because it looks like such a large figure, but actually when you break it down you can kind of see where that's coming from. And I think at the moment I'm probably more nervous than ever, as I'm sure other councillor colleagues are, around investment rates and interest rates, with the kind of global political insecurity that we see, and how that then impacts on market values and investments. So it's always worth kind of asking the question. Not that I'm a finance expert, I struggle with my own household finance, to be honest, but I try my best. Do you want to come in?
Thanks, Chair. Sorry, sorry, I should have asked this before you had your chance. Really just picking up on the last statement, which is on 193, page 193 of that, which is pulling together some of the things we've been reading here. So obviously the first line is very positive. No significant weaknesses have been identified, but we talk about, as you say, those uncertainties and how we would respond to the development in a negative way of any uncertain things. And at the moment we're saying the authority established specific reserves to cover the risk of variation. Obviously that really just reassures us all at the moment. Do we need to think about anything that's beyond? I mean, there's always the unknowns. I appreciate that, but what we're saying, as things stand, this is a statement we can say with confidence that we were able to respond to any structural ways to do that. So is that how we can? Is that sufficient for the time being? Is it? Yeah, that's my question really. Sorry if that wasn't a clear question.
Yeah, if I might just pick up just in terms of our reserves. So members will be aware that obviously we are set to agree the medium-term financial plan this afternoon in the budget meeting. Within there is a number of reserves, beginning with the general revenue reserve, which will equate to around 5% of our current net revenue budget. That reserve is available and it's not earmarked for anything, and it is for them future things that will, for something from a rainy day type fund. In terms of, we have a number of other earmark reserves that we will keep in place for some of them things that may happen. So around inflation, we have an inflation reserve that will cover us for increases and fluctuations in pay and prices.
Thank you.
Any further questions? No? I think what we've gone through in this discussion is really pertinent to some of the discussions we'll have in Budget Authority this afternoon. And I know that in terms of that sometimes the Increase for Increase Act can be quite a controversial issue and is often used as a political football, especially at this time of year. However, what we can clearly see is that this authority, as much as possible, is trying to mitigate for financial instability going forward, including unknown aspects around future pay awards, inflation increases, things like that. That's very, very important to the financial stability of this authority, and I'd encourage people to keep that in mind when we go into the Budget Authority this afternoon. Thank you very much for that, really helpful. So are we happy to approve the recommendations? Agreed, lovely, thank you. And item 6, which is the internal audit process report. And Mike, it's back to you.
Thank you, Chair. The purpose of the report is to update members on the progress of the 25-26 internal audit plan approved by Audit Committee in June. The progress report is attached as Appendix B, and 3 audits have been completed up to January 2026. All 3 audits have been issued with a substantial audit opinion. The remaining audit work will be completed as planned in Q4, and this allows the auditors to review how systems and controls have operated over the majority of the year. The year-end internal audit plan report will come to members for consideration in May, and as members will be aware, internal audit services are provided by Liverpool City Council, and Hayley Dickinson Moore, lead audit manager, is here today to take members through the progress report in more detail. Over to you, Hayley. Thank you.
Hi, nice to meet you all. Yeah, really pleasing report. Like I said, there's been 3 reports completed, all of which were substantial assurance and no recommendations, which is absolutely fantastic. There is 1 audit in draft and 2 ongoing, but actually I think all 3 of those now are in the final stages, so hopefully we should be able to finalise those fairly quickly. And then progress being made with the remainder on the plan, so don't foresee any issues with those. In terms of follow-up, I think worthy of a shout out, really impressive work's been done on that. There's 22 recommendations that have been closed down and only 4 outstanding. So Mike and James have done a lot of work clearly with the team to push on and get those closed, especially because some of those were quite long-standing recommendations. So that's really impressive. So and yes, I think that's everything really. Any questions?
Thank you very much. Any questions from anybody? No? It's really pleasing to see, and I just want to say thank you to Mike and the whole team for the level of work that's gone into every single piece that we've had on the agenda today. It's obviously a substantial report pack, it took some reading, but outstanding work, and in terms of being an elected member, I don't think we could ask for more information than we've been given. The transparency is excellent, so thank you very much. And if there's no further questions, are we happy to agree the recommendations on that item? Okay, so thank you, and the date of the next meeting will take place after the annual general meeting, which means that I will not be the chair because I'm standing down in May. So can I just thank you all for your contributions to the Audit Committee this year. All as elected members, you've been absolutely fantastic, and it's been a joy working with you. Thank you for being so engaged in the process, and thank you to Mike and the whole team. Okay, see you in the next meeting. Bye.